Hey traders! For this lesson we're going to go over the different types of orders that exist and how to best use them to suit your trading needs. The first order type is the market order. This order type can be used to buy or sell positions. This order type will always get filled. Buying will be done at or near the offer price, and selling will be done at or near the bid price. The problem with the market order is a lack of control for where your order will be filled. For example, if price is moving upwards very quickly, say on the break of resistance, you may submit your market buy order when the offer is currently at $100.05, but not get filled until price is at $100.15 or even worse than that. This lack of control leaves many traders utilizing limit orders. Lastly, when using a market order with a direct access broker, you will be charged a fee for removing market liquidity, which can make your trading expenses add up fairly quickly. The second type of order is the limit order. This order does not always get filled like a market order. When you place a buy limit order, you will get filled at the order price or below, and when you place a sell limit order, you will get filled at the order price or above. The good thing about the limit order is the trader has complete control over what price they enter and exit positions at. Unlike the market order, this order will not always get filled when you enter it. For example, if the current bid is $100 and the current offer is $100.01, and you place a buy limit at $100, your order will not get filled until the offer matches your bid price or until someone else buys at your exact price, either through a market or limit order. The best thing about this order is it will help eliminate slippage and bad fills. However, you might not always get filled for your position all the time. The last benefit to this type of order, with a direct access platform, you will get a credit for adding market liquidity when you use this order outside the current market bid and ask prices. And this helps keep trading costs down. The next order type is a stop loss, which is somewhat similar to a limit order, only the opposite. This order is typically used to close out of a losing position. This order will close out of a long position if price breaks below your stop loss order price. This order will also close out of a short position if price breaks above your stop loss order price. Like the market order though, this order can get filled at different prices. For example, if we have a long position and we place our stop loss at support at $99.99, if price breaks below this with some momentum, our stop loss might not get filled immediately. Another type of stop loss is called a trailing stop, which allows the trader to continue to move their stop closer to the market price to lock in profits in a winning trade, but leave the potential to continue to increase profits. This order is the same as a stop loss order, but the trader or software continually changes the stop price. The last order we will cover is known as the OCO, or one cancels the other order. This order type generally consists of either a limit order and a stop loss order, or a buy limit order and sell limit order. This order type will cancel the other order once one order is activated. This is useful when having positions that you do not want to attend to all day. For example, if we are long on a stock, we can put in a stop loss at $99.99 and also put in a limit order at $100.99. So this way, if price breaks above or below our parameters, our order will be closed. While there are many different types of more complex orders that do exist, the ones that we just outlined are the order types the majority of traders use on a daily basis. Different platforms also allow you to customize different order types to suit your trading needs. In our next lesson, we will briefly cover the information that is conveyed on the level 1 and level 2 screens. Until then, and as always, good luck with your trading.
Hey traders! For this lesson, we're going to look at the level 1 and level 2 screens, discuss the difference between the two, and discuss how they can help you with your trading. For this lesson, we'll be taking a look at a live screenshot of my trading platform. This area is the Level 1 and Level 2 screen. The top gray area is what we call Level 1 information. This provides information such as volume, high and low of the day, percent change, price change, last sale price, open and close price, current bid, current ask, and the current spread. On my platform, I only display some of this information that I find most useful. Level 1 information can be found on any typical website such as Google Finance or Yahoo. Down below, we have what is called the Level 2 screen. This screen is different than Level 1 because this screen displays inside market data that can only be accessed on a direct access platform. In this column, we have MM, which stands for market maker. Here we see price, and here we see the quantity of shares. As you notice, there is a left and right column. The left column is for the bids. That would be the people willing to purchase the stock and the highest price they're willing to pay for the stock. The right column, we see the offers. That would be the people trying to sell this stock and the lowest price they are willing to sell this stock at. The MM column contains different abbreviations such as NASDAQ, ARCA, UBSS, etc. Market makers at UBSS represent institutional traders that trade extremely large size and can make up a large portion of daily volume. There are also ECNs, which exist in this column, such as ARCA and NASDAQ, which are electronic routes that retail traders can use to trade on. This is simply a series of computers that allows different bids and offers to be matched. This system provides a fast and fair price for all traders. Different types of Level 2 screens can be customized to provide for different layouts. The type I like most is where colors are used to group price. As you can see here, yellow is used to represent the 3487 level, and green is used for the 3486 level, and so on. Now you might be asking yourself, how can I use this to help my trading? Well, the information on Level 1 is helpful because it is important to know the highs, lows, and volume in a particular stock. However, most of this information can be provided just by looking at a chart. I personally don't use Level 1 too frequently. As for Level 2, there is much debate over how this screen should be used and if it should be used at all. It is important to realize that the information on Level 2 is always changing and is not set in stone. Bids, offers, price, and size can always change without orders being executed. The Level 2 screen is often referred to as a game because large-sized trades can utilize it to make a stock look stronger or weaker than it really is. Another important thing to remember about the Level 2 screen is that not all bids and offers appear on Level 2. If we take a look at my order entry screen and I do a limit order on the Qs for 500 shares, I can select how many shares I want visible on the Level 2. This can range from my whole position of 500 shares to none of my position. This enables large bids and large offers to be out there without traders knowing so. So we might take a look at the Level 2 screen and expect a stock to break through resistance or break below support, but it may never do so because of these hidden bids and hidden offers. I personally don't utilize Level 2 too frequently, aside from looking at the current bid and ask price. Trades should never be based strictly off Level 2 information. It can be used in conjunction with good trading setups. However, much of the information displayed on Level 2 is games, and it is important to acknowledge that it is not a very reliable trading indicator. For our next lesson, we're going to cover time and sales, which unlike Level 1 and Level 2 is definite and set in stone because it consists of actual sales that are occurring or have occurred. Until then, and as always, we wish you the best of luck with your trading.
Hey traders, for this lesson we're going to be covering the time and sales window, address how time and sales differs from Level 2, and go over how you can use time and sales to benefit your trading. For this lesson, we're once again going to be taking a look at Brendan's live trading platform. Here we can see the time and sales screen, which is enlarged and placed next to the Level 2 screen. This box has its name because the primary information which most traders take out of this box is the time and sales of the stock they are watching. We can see in this column we have the price of the sale, then the size of the sale, the time of the sale, inside bid and offer, and the market or ECN where the sale took place. Now, you might be wondering what the difference between level 2 and time and sales is. They seem pretty similar and are usually talked about together. Well, as we learned before, level 2 is always changing. Any bids or offers on level 2 can be changed or canceled at any time. However, time and sales information is set in stone. Actual transactions are the only things that appear in the time and sales window, meaning that time and sales never changes and will be the same when you see it or 5 days from now. This is all great information, but how can time and sales benefit my trading? Well, the way I use time and sales is to look at the price and size of recent sales as well as the momentum behind the price move. Large trade sizes on the time and sales windows can be an indication of institutional trading that is occurring and can help in understanding volume and price movements at key price levels. We can also look at the flow of trades and see how much momentum is behind a move by looking at the number of sales which are occurring. Time and sales is also color-coded to help give traders a feel for whether the bids are being hit or the offers are being taken. For example, if the last sale occurred at the offer price, the color of that sale would show as green. If it then occurs at the bid price, the color of that sale would show as red. This color coding can give traders a feel for whether or not a stock still has momentum left in it. So that was a basic overview of the time and sales window. Keep in mind, with more and more experience, different setups and price movements will become more apparent through the time and sales window. For our next lesson, we're going to cover the different types of charts and which charts are best for traders. Until then, good luck with your trading.